Hello and welcome to another Impact Insights. I'm delighted to have today with me Rob Barnard from Masthaven, and Rob is the Director of Intermediaries. Hello, Rob.
Morning, Dale. How are we doing?
Very good. How's things with you? How's the last sort of 3-4 months been? Obviously, it's the high agenda of everybody's thoughts at the moment. Are we out of this? Are we in a bubble? What's the scenario at the moment?
I don't think we can be complacent, Dale. I think hopefully we're through the worst of the initial part of this sort of pandemic, but let's not be complacent. I think people talk about recovery, what the shape that will be. You hear also it's like a Scrabble board, isn't it? Recovery. You're talking about V's, U's, W's. I think some people are saying the signs are that the V is starting to come back. But the concern for me is that V could very quickly become a W and go down again before it goes up again. Could it drag along the bottom? I think we just need to take sort of baby steps, really, Dale, and make the most of opportunities that present both brokers, distributors, and intermediaries. But let's just play it very, very cautiously.
Yeah, sure. And Masthaven became a bank, 4 years ago now?
Yeah, 2016.
I know you've been there the last couple of years, but do you think that puts Masthaven in a really good stead to see through all the trials and tribulations from Brexit last year, obviously COVID this year? Would you be in that position if you weren't a bank right now?
I think I'd be wrong to say if it's certainly helped us. I've worked for non-bank lenders, as you know, and bank lenders as well. And it was funny. It was probably 2 years ago around this time I was having conversations with Andrew Bloom, the founder, and John Hall, the deputy CEO. And they said, well, why do you want to move from where you are to come to Masthaven? And ironically, I said that the appeal was the fact that Masthaven were a bank. Being honest, 2 years later, did I really think that I'd need to sort of that comfort of being a bank to help us keep going? But it's ironic, isn't it? I mean, I worked for a non-bank lender at the time of the last credit crunch, and believe me, 2008 was not a great time to work for an American-based investment bank. So it's undoubtedly helped us, Dale, absolutely. But it doesn't come without its challenges. Being a bank doesn't sort of ring fence you and give you the total comfort that people maybe think. It presents its own challenges as well that we have to evolve and deal with.
Yeah, sure. And there's a lot of those on the go at the moment. And like you said earlier, I think there's still some to come. And talking of that, you're a people's person. You like to see people face to face. You're good at presenting, etc. Are you missing it? Is this the new norm? Is this going to be the way it is moving forward, or have you got plans to get back out?
I think we'll see more of this. And I mean, you and I know each other, Dale. We've known each other for donkey's years. So it's as easy for you and I to jump on a Zoom call like this and have a really good, warm conversation. I probably feel for those people that are maybe starting out looking to forge relationships, because you can't beat, can you, that palm on palm smell of aftershave and a pint at a bar to basically get to know people. Because it's great to meet people over the internet, but it's not the same as actually being in somebody's company. But I don't think we'll see a mass stampede to London anytime soon for big events, to be fair.
No, I don't think so. I think people will still avoid public transport and bits as well. So let's talk about products. Very much heavy in the residential side. Have we seen an increase in that over the last few weeks as the valuers have been allowed back out to the properties, etc.?
Yeah, I mean, it's business volumes, to be honest, at Masthaven have been really good over the last couple of months. And I'm not being daft to say I know part of that will have been because part of the market's not been there. The supply's not been quite as sort of wide as it has in the past. But volumes have been certainly good. What we did when sort of COVID came around, Dale, I mean, what surprised me more than anything is the speed at which this thing hit. I mean, if you remember, Dale, we were stood in a bar in Weybridge having a beer, I think, at the Specialist Lending Centre the week before sort of lockdown was almost announced. From there, I think you'd just come back from skiing in Italy, so we were just stood back a little pace from you and sanitising a little bit more. But great to see you still here. But it was the speed then that things hit. So from Weybridge on that Friday, I went down to Devon for a week away, and yes, it was starting to be talked about. But then I came back on the following Monday, and my days, the sort of world had changed, hadn't it, significantly. So again, what we did, we weren't the first to make changes. We weren't the last. We wanted to watch and see what other lenders were doing and make our changes sensibly. But we wanted to try and put our sort of head in the broker space as well and distributor space, because what I think the brokers wanted at the time was continuity. They wanted maybe for us to make one change to product and criteria rather than death by 1,000 cuts, which, don't get me wrong, some different funding models dictate that has to happen. But I'm pleased to say that's what we were able to do. We made one change to criteria, tightened up accordingly wherever we needed to, maybe just stepped back from a couple of spaces that we're known to lend in. But But from then, Dale, to be fair, everything we've done has been really positive. We already had AVMs in the residential remortgage space, but it was great. We were quickly able to introduce them into buy-to-let and into purchase as well. We didn't use AVMs in bridging. Pleased to say we adopted that very quickly. And not only did we adopt it, we evolved it. We increased loan to values on it as well. So it's something that we've run with really quickly. We wanted to try and keep bringing products to market in the residential space. So trying to use the sort of AVM model to help continuity go through, we raised some, launched some fees-free deals up to 65%, where the valuation could be done, the offer could be issued, etc. And I think that was all really, really well received. So great to say, we've traded throughout, we've not pulled any offers. And we're still here, and we're growing business volumes, which is positive.
Yeah, and you mentioned there some of the blips and things. The adverse side of it, or the near prime side at the moment, I would say is probably the biggest gap in the market currently. Is that something that you're really, you play in that market? Is that something that you're really going into, or is it just you're just waiting to see what happens over the coming months with regards to employment?
I think it's a watching brief, but it's certainly on the agenda, because I think, as you've said, I think it's a market that is going to grow. And I think just to see what your thoughts are, that I'm thinking when we talk about sort of like that light adverse, it's not necessarily even CCJs or defaults. It could be as low as sort of credit score fails, where the high street have just tightened their sort of scorecard just that little bit too much, that good business is basically left between two extremes. So I think it's a market that will grow, and certainly something that, yes, we want to continue to sort of work with brokers and distributors to develop a proposition that helps that sort of people, because people have had a blip. They're normally great borrowers. They've always paid the mortgage before. They'll pay it again. It's good lending.
And do you think, just talking about mortgage payment holidays, do you think people just jumped on the bandwagon too early, seeing the word holiday, and just thought, well, hey, I'm going to get some free money out of this, not realising that A, lenders might treat this as, and we're seeing this already, lenders might treat this as adverse, and B, not realising that that's actually it's a deferral rather than actually a holiday as such, and people will come to regret that later down the line.
I think the first thing I would have done if I was a borrower, I'd have gone back to my broker and talked to him about it, to say, what does this mean for me? I think you make a really good point there to say it's not a holiday, it's not going away, it's not sort of being waived. And maybe some people did think, maybe I just need to take this breathing space. I don't know what's going to happen, but then maybe their situation's worsened as time's gone by. But again, I think opportunities there will come along. We're obviously taking applications now from people that have had payment holidays, and it's great business. So again, just if there's any doubt from borrowers, potential borrowers out there, work closely with intermediaries and distributors. Get to the right lender that can look at your credit history, your profile, and make sure you get into that right lender the first time.
Yeah, and one of the other big things is obviously earlier in the year you had 6 times income. Affordability models obviously have been very, very restricted over the last few months, especially. Is that internal decisions, or is that coming from external regulatory sources, etc.?
I think we all have regulatory guidelines and frameworks to work within. I think realistically, we have to use our lending capability and our affordability model sensibly, shall we say. So I think there are opportunities sometimes, Dale, when maybe a slight stretch on income is appropriate, but I think that's the key thing, it's where it's appropriate. So I think you're not going to be seeing big income stretches from Masthaven, or probably anybody in the very near future. We work within the guidelines that the regulator gives us, but also our own credit risk appetite dictates what we want to lend on at the right time.
Okay, and obviously you do quite a lot of buy-to-lets. What sort of trends are you seeing at the moment? Are the first time or the single property landlords, is that now gone and dusted, or are we starting to see people who've actually got some money, they've re-looked at their finances over the last few months, and now it's something they want to invest in?
Yeah, I mean, if you look at how the buy-to-let market's changed over the last sort of 3 and 4 years, you could have said that, yes, you could see the death of the dinner party landlord, that you wouldn't really see those one-off landlords looking maybe to supplement pension incomes, etc., into retirement. You know what? I don't think they've necessarily gone away. And if you look at what Masthaven do, we deal with people at this stage anyway that have got relatively small portfolios. So we're not one of those lenders that lends to people that have got significant background portfolios. We are lending to people that have got tiny or relatively modest portfolios, and we are seeing an increase in that type of business, which is positive. Okay. I think what we have seen a change in, other than the traditional from individual name to limited company name, etc., we are seeing a continuing trend in people looking for yields, which I think is really important. So people looking at maybe diverse in portfolios, maybe looking at at HMOs a little bit more, where criteria has obviously been tightened a little bit. So let's see how that evolves over time. People were looking at holiday lets, and again, that's been adversely hit, hasn't it, over the last sort of 4 months? But again, I think probably that will come back as well. But when I started out, probably the similar sort of time to you in the market now, the golden egg in buy-to-let, I always think people wanted to save up to have that big, massive, big value property in London that would see massive capital growth over time. The yields were really good, but they wanted to save up the 100 grand or whatever it would be to have as the deposit on that deal. What we're definitely seeing, though, is people have moved away from that now because the yields and the capital growth opportunity have changed. And they're coming up north, mate. They're coming up to the northern powerhouse. People are looking at splitting that big deposit from one London property, maybe into 2, 3 or 4 properties up north, where yields are really good. And there's still the opportunity for capital growth. So that's definitely a trend that we've noticed over the last few months.
That's a good point. We're seeing that as well. Some of our southern landlords most definitely are buying up north at the moment. And you mentioned holiday lets there. Just personal views with the staycation happening this year and not many people going abroad. Surely that's going to be an area that's going to have massive growth, isn't it? Yeah,
I think so. I think, as I said, it was adversely hit, obviously, at the time that the market, sort of the hospitality and the sort of holiday environment was sort of closed down, wasn't it? But I think as that returns, there will be an opportunity there. Because I think, yes, we're seeing the loosening in criteria on what you can do and where you can go, etc. But you know what? I think it's going to take a bit of time for people's confidence to build up. I don't really fancy jumping on a plane anytime soon. I don't do anything exotic, but I have a couple of weeks in the sun each year. But I'm already thinking next year, you know what? North Wales might look quite attractive as opposed to the Canary Islands.
Fair play, fair play. Bridging size, obviously that's been, we've seen massive increase in bridging over the last couple of months, mainly due to chain break finance and people downsizing, can't sell their existing property and stuff. Is that a common trend with Masthaven, or are you seeing other areas for bridging at the moment?
No, I think that's fair. I think undoubtedly what we saw sort of increase first across our portfolio of property and offerings was bridging. Again, some people were pulling out the market, so supply was a little bit limited, but we have seen that continue. And I think a couple of things probably have sort of helped with that. When we first went into lockdown, we at Masthaven, my sales team, for example, we redeployed them, as many lenders did, into the payment holiday queues. Let's deal with people that need a bit of help initially. But as we've pulled out of that, what we did is we got the guys doing some outbound calling because we wanted to test the temperature in the marketplace. And there were some really good stats, and this was probably in early May, so when we were right in the height of the lockdown. We pulled together a questionnaire asking them to test the temperature of brokers and what they thought, and there were some really good stats came out of it. Despite everything, 71% of all brokers we surveyed at the time, and we spoke to about 250, so it's not a tiny group, 71% said that they were still very confident in the market, or confident in the market moving forward through the rest of this year, with 65% being confident, 6% being very confident. 25% were unsure, and only 3% were not confident. Now, obviously, the market's changed a lot, but there's more supply come back to market. But back to your point about bridging, one of the big shout outs of that survey was people wanted to find out about different strains. I think brokers were thinking, you know what? I don't want to be a one-trick pony and just do mortgages. I want to find out about these things that I've probably thought are a bit hard, a bit clunky, a bit expensive. So we're finding that people wanted to find out about bridging. People wanted to find out about second charge opportunities. And again, the message from us is, we're quite happy to deal with you directly, of course we are, but where you need that bit more help and reassurance and guidance and making sure you get to the right lender the first time, speak to people like Impact. These guys do it all day, every day. They'll get you to the right lender. They'll take any pain out of it. But realistically, dealing in the bridging space nowadays is as simple, affordable and easy as it's ever been. And I think part of the things that's helping us with it, and it'd be interesting to know because you guys use it, is our portal that we launched. So I think that has certainly been a really big advantage to us over lockdown.
As you know, even I used the portal just recently on one specific case. And incidentally, that was a case that was declined originally when the broker came direct. And actually, we turned it around, gave some good reasons why. And then in the end, you proceeded with that bridge. And it worked really, really well. But yeah, if I can use the portal, then anyone can use the portal.
But again, you demonstrate there, Dale, the importance of using a right distributor. Sometimes, not about presentation, but the understanding of how a case looks and feels and fits can be presented better to the lender from a distributor like yourself that's dealing with that business all day, every day, rather than somebody that's trying a bridging deal for the first time.
Absolutely, and we brought in additional security as well to give you a bit more comfort. So that worked really well in that case.
Which is great.
And you mentioned technology there. You've invested heavily in it. Has it done what you wanted it to do? Has it sped up the process, or has it just streamlined the proposition?
Yeah, I think all of the above, really. I think what it's done for us is, in normal terms, a lot of brokers come to us in a bridging arena initially, probably to get heads of terms out. They need to see what sort of terms will be issued. And if you can do that through a quick quote through the DIP system, through the portal, that's great, because that's a very light touch. But what we are finding then is that it allows our underwriters, very similarly really, Dale, to in the mainstream arena or the mortgage world, it allows the underwriters to concentrate their eyes and their efforts on the deals that need that exact thing. So really it'll filter out the stuff that should go fairly quickly, decline stuff that really is never going to touch the sides or never be for us, and concentrate our efforts, streamlining the process, in other words, for those deals that we need to sort of look a little bit closer and work with the distributor on.
Yeah, no, I think that's absolutely right. And is that what's the next level of technology you're looking at? So are you done for now, or are you looking at the next stage? I mean, there's a lot of talk about tech, has been for the last couple of years. I think a lot of people have put their plans on hold following COVID.
It's ironic, isn't it? And let's give a shout out to OMS there. I mean, you guys have done tremendous things, or your sort of business has done tremendous things there, leading the charge in it. So we applaud you for that. You remember I gave you testimonials early days on what your system could do.
Yeah,
I compare it, and you're right. I think a lot of people have just put things on hold a little bit, but I think you watch it will start to unwind again. So I compare APIs with Brexit. Here we go. Barnard's going off on a tangent, but just bear with me. If you think about it, pre-COVID, pre-lockdown, all we heard about was Brexit and APIs. They seem to have not been spoken about greatly over the last 3 or 4 months.
Yeah.
But all of a sudden now, Brexit's starting to come back onto people's agendas. It's finding its way back to the news, and I think APIs and technology will as well. So I think where it's been paused a little bit, Dale, I think people will now aggressively grow their technology objectives. And again, I know we're starting to put together wish lists and items that we want to discuss on a technology improvement program. So watch this space. I think you'll find that the sort of time will be caught up a little bit as we move forward.
Technology improvement program, a tip. I like that. We'll use that one. Thanks.
You can have that.
Right. So just running out of time. So just to wrap up, brokers, what sort of advice would you give them right now in the current climate?
Don't say no to anything. Don't be frightened of those more complex areas that you've maybe shied away from in the past, bridging, seconds, more adversely complex deals. Specialist lending, as you know, I talk about it long and proud. It's the new mainstream, and I think it will become even more the new mainstream for brokers. Let's not concentrate our efforts on just taking for granted product transfers, because I think the shape of the product transfer market may change as we move forward. They may not be as sort of prevalent as they have been, with lenders maybe looking to take more of that business direct. Try and work in those areas that you can develop your opportunities on, and maybe pick up on opportunities where other brokers have turned things away because they think things are difficult. Pick your right lender, pick your right distributor, work with them both, and you'll prosper.
Brilliant. That's a really, really good bet. And if we fast forward a year, where will Masthaven be if we're having this conversation in 12 months' time?
Hopefully more of the same. You'll see that our business volumes are growing and growing significantly, which is great. What we need to do is make sure that we maintain that market share as supply returns. So you'll see innovation coming out a little bit. We want to develop our technology offering through my top tip, and really more of the same. Let's keep working closely with brokers, with distributors, to show them that specialist lending is a really, really important part of the UK mortgage sector. Yeah,
no, brilliant. And just final bit on you. Normally, December time, Panto, you're involved, aren't you, most years? What are you going to do this year?
You know what, mate? I think we need a good laugh when this is all over. And so, yes, I have been writing a Panto. And I've been talked and taunted a little bit from a lot of industry colleagues, Dale. You're going to walk onto something here if you're not careful, to say, you know what would be fun? One of these years, we need to bring Barnard's Panto to the industry. And so I wouldn't rule that out. Maybe not this year, but I think we could all have a bit of fun, maybe make a bit of money for charity as well, by involving all the characters in our fantastic industry, and there are lots of them, and bring something like that to life a little bit. So before I hang my boots up in the mortgage world, you can give me that as an objective in my end of year review, if you like. We'll do an industry Panto in the not too distant.
Love it. I think that's brilliant. I really enjoyed this, Rob. Thank you so much for your time.
Me too.
Much appreciated. And thank you very much for watching. There'll be more Impact Insights soon. In the meantime, keep well, stay safe, speak soon.